Welcome to Trading Lounge and the US indices for Tuesday, September the 20th. So this is just the weekly chart here, and we're looking at all of this as the A wave here, the B wave here, and the C wave down here for this. So the wave A and wave C can have a bit of equality in terms of length. The alternative count that we had before this particular count, well, wasn't much different really. It was just putting wave B over here and then looking at this as an A wave and a B wave here, and then a C wave up here for the B wave and then down. So I still can't rule that out with the S&P. The stocks are telling me that we should be coming straight down at this point, but I just thought I would remind us about that particular count here. So yeah, this is it. Now basically we would be looking for the market to come down to the old lows and have a bit of a bounce at that point, and you know, it could come lower and, you know, could become a bit shorter and all of that sort of stuff. But in a bit of a nutshell, we'll be looking at this sort of thing here, 3, 4, 5. And one of the reasons for confirming this here is that we also have to remember that this particular move here is in 3 waves, so it's corrective. So at some point this low will be taken out. The question is, will it be this move down through here, or will we end up going up here first and then going down in that fashion? Like I mentioned, I think that we're coming straight down, but we still need to gather a little bit more evidence, and I want to get past I want to get past this particular structure to really confirm that this is the direction that we're going at this point. On the daily chart for this, just drilling in a little bit, so we've got our A wave here, and then an A and a B, and a nice 5-wave structure to the upside to make wave C of B here that also pulled back up to the 50-60% sort of area. And then we've been looking at this move down through here as wave 1 and 2, and then this move down through here. In the stocks, there's 2 ways to look at this move down here. There's one way to look at it, you know, when I say stocks, I mean the half a dozen or 10 stocks that we do videos on each day. I take a consensus. They're not all exactly the same. So we have stocks like Meta and Tesla and Nvidia kind of doing their own things, but generally the consensus, you know, of Apple and Amazon and Microsoft and Berkshire Hathaway and the banks, that kind of consensus, you know, so the majority of them. So what we've been looking at when we come down here, there's some stocks that we could look at this move down through here in 5 waves, and then we would have a 3-wave move back up and to the 50-60%, and then down at that point. Now there's some stocks here that we can look at it slightly differently, and we can look at this, we can look at a move down to this low here as a wave 1, and then back for a wave 2, but quite small, and then down for 1 again, a smaller 1 and 2, and then looking for like 3, 4 and 5. So that would give us 1, 2, and then 3, 4 and 5 coming down here, like that sort of thing. So one of them is we can count down as wave 1 and going back for wave 2. The other one is down for 1, back for 2, down for 1, back for 2, and that's where we are at the moment, just in this little area here. So yeah, they're the 2 counts that we need to keep an eye on. So how far will it rally is the question, right? That's what we'll be looking at today. And I also think that, of course it matters, but in another way it doesn't matter, because all we need to do is really look to short weakness. So if this was an example here, we say we're coming down here and we were looking for a rally, but we weren't sure how far it was going to go and what we should do. Well, obviously we can short it under there, and then we can look to short it under here. And then if we can see by the time, because once something matures, you know, moves up further and matures, when a pattern matures, you in the beginning you're not kind of sure what it is, and then halfway through you've got a couple of counts, and then as it matures you can kind of, you know, weed them out, and you've got a better idea, and you might be able to get a position up here somewhere, you know, that sort of thing. So that's the emotional journey that we need to go through here at the moment. So of course we can short it under here, and then tomorrow there might be a bar like this just on the daily chart here, and then we could also look to short it under that bar. But tomorrow it might mature to the point where we can say, well, that's it. We can short it at this particular price, and we could get a small position here, and then another position here, and yada yada yada, and then be on our way at that point. So that's kind of the little journey that we need to move through on. So let's go for that journey, and we'll be looking at some ETFs as well, just to get a bit of an idea. But you know, I don't think you know, most people use futures contracts, so the ETFs are kind of okay, but they're not really the tradable sort of real deal sort of thing. And you know, the XPX and you know, the indexes that you can't trade, they're normally easier to count, but the futures market has that off hour, so it makes them a little bit trickier in all of that. So we need to sort of understand that when we're looking at certain markets. Okay, so in this picture here, we're looking down at this as wave 1 and 2, and then we're looking down for 3, 4, 5 to make 1 and back for 2. Is that the case? Possibly, but if this does count down for 5 waves here, for example, then that count that we had over here as having this as a C wave over here, and having a look at this as the A wave here, and then having a look at this as an A, B and C wave to here, then we're left right on that low with that. So I don't think this is the case, but you know, we need to take out, if we took out that low, then I can dismiss this from the S&P, but I can't do it just yet. But the stocks are telling me that it shouldn't be the case, but it's just something that we need to keep a little bit of an eye on. So I just need to mention that again. I thought we'd sort of seen the back of that ghost, but yeah. So I'm just going to cut through to the 1000 tick, and then also through to the 100 tick, and just have a bit of a look at this here, and we'll just get a bit more data on this. So as I mentioned, we can count this move down through here in 2 different ways. We could count it down as wave 1 here, whoopsie daisy, as wave 1, and then we could look for a 50-60% retracement level back up here. So this would be a little wave 4 in here, and then wave 5 here. So if we get 5, and we'll talk about this in a bit of detail in a moment, but if we get this as 1, 2, 3, 4 and 5 here, then we're going to get a B wave back, and then we're going to get a C wave up there, and then we'll come down at that point. Is that going to be the case? I kind of don't think so, because of where the banks are at the moment. They've got, I see most stocks, I think that we could actually top out in the next session. That's what I'm thinking. So in a nutshell, we can look at this as the A wave, the B wave, and then 1, 2, a little 3, 4 and 5 in here, and then top out. And also too, this this section through here, that's where the most of the volume was turned over. So that's really going to be the resistance area in that space. But we'll see. By tomorrow, we'll know if we're going to get 1, 2, 3, 4 and 5 up here. If we get that. So yeah, anyway, that's that. So it's possible, I'm just saying it's possible, plausible, probably not probable that we'll be up here for that. But we could count this down as 1 and 2 here, and 3 and 4 and 5 here. There's a different way to count that down. You can have wave 3 over here, but when you look at the this is not the ETF or anything, but this is just another, looking at all of this as 1, 2, 3, 4, 5. That's another way to count it down, and it fits okay at that point, you know. Yeah, so I'm just looking at all the possible ways. But as I mentioned, you know, we can short down here, we can short under this low, we could bring it up and short it under this low at this point. We could probably put a line through here as well, and once that became the retested resistance, and when you've got a when you've got a line through here, it's the same as the classic trading levels patterns that we look at on the short side here. The horizontal lines, it needs to migrate from being support to resistance and confirm that it's retested and failing at that point. So it's the same with trend lines as well. The market will come down, bounce off it, come through it, and then retest it and then drop. You've got to be a little bit careful with your stop, because depending on the wave count, sometimes you can get a second retest of that. So be careful about putting a stop here and just keep it at the second one. But it needs to migrate from being, support to resistance. So that's how you would use that. And then, you take out these lows here for that, but keeping a stop on the second high, not the first high. Of course, you could short it up here, and you can short it here, and you could short it here. I mean, crikey, you can do whatever you want, as long as you know what you're doing and you're managing your exposure. That's the important thing. And, you develop your skill set in all of this as well. So drawing trend lines are useful until they're not, yeah, that's one way to count it down. The other way to count it down here, is which we're going to look at next, is on the 100 ticks. I might need to bring in a bit more data there. So in this case, we're looking at wave 1 here and 2 here in blue, and then counting down 1, 2, 3, 4, 5 to the green wave 1, and going back to the green wave 2 here. So we'll be in this will be wave 2, so we're in wave 3 coming down, and wave 3 would have 5 waves in it. It would have 5 waves of green there. So that's possible that we've got that. That could sit right here. I'll just leave that there. But so we would be looking at all the way down for wave 1 here, 2 here, and then we'd have green wave 3. And green wave 4, and then green wave 5. So that's how that would play out there, so to speak. So we would have wave 2, and this green wave 3 here, this would be longer than this move from here to here. So it's not a big move, so it could go about here somewhere. And then we would have wave 4, and then we would have wave 5 coming down here, which would be down here somewhere, and that would make wave 3 at that point. And then we'd have blue wave 4, and then down for wave 5 at that point. So that's that. Now this little rally here, if we look at this, if we look at blue wave 2 here, for example, we take this top here roughly. You could probably take the other one, but that's okay, just for the time being. That gives us our 61.8% here. Now, if it moves past that, that's cool. We can go to the 78.6, which is the square root of 61.8%. And I kind of like that, because it's right in the middle of this consolidation here, which is the resistance, of course, because it's got all the volume that was there. Folks that have shorted here will be wanting to get out here. People that shorted down here will want to get out. All of that pressure will be there. But in terms of counting this up here, in this case, we got this is the low here. I think maybe on the... Oh yeah, that is the low on the SPY and stuff. So this is the SPY here. So that's actually the low here for that. But it just sort of gaps down a little bit on that one, but we'll come and talk about that in a moment. But just coming back here, if that was wave 1 here, let's say, and we're going back for wave 2 here, then we would need to look at this here as 1, 2, 3, 4, 5 for the A wave, the B wave, and then 1 and 2 here, and 1, 2, 3, 4, 5 here for the third wave. So we'll need the fourth wave and the fifth wave up here. So it's going to take us up here somewhere for this. A little bit more, one more move to the upside. So we'll just see how that goes. Tomorrow we'll have some answers about this, but if it pushes up further than this here, then we're going to have to look at the other picture at that point. So we really want it to break this trend line here. So it will come down, bounce off the trend line, go back and check the 900. It'll come down here, check back here, and then drop at that point, and that would be your short trade at that point if you were lifting it up, because currently we can put it here, we can put it here, here, we can put it here, so then we could put it over here for that, but I'll just leave it there, and I don't need all of that now anyway. But yeah, so really we just got 1, 2, 3, 4, 5 here to finish. Let's see if we finish. That's the question. You know, like I said before, it doesn't matter if we go further up. We just have to keep going up until it clicks in. You know. So this is the SPY here. Once again, we know that we can count it down as wave 1 over here and wave 2 sitting over here. We know that. And then having this down as wave 1 as well. But I like to have a look. I don't like to get too fixed on things until I can confirm things. So, but the same thing here applies as well with this here, is that you can see that, I mean, this B wave may be able to go here as well for that, but that's another story. The good news here, in a way, this is 1, 2, 3, 4, 5 here. I mean, that's the thing with spikes, you know. Actually, that didn't make the new low there. That's right. Yeah. So we could put this. This is the low. That's the low on the futures. This is the low over here for this. So really, we could put this over here for this. We could look at this as the A wave here, then an A and a B and a C wave over here for that. So you can count it a little bit differently, you know, but that's the trouble with spikes in the market. Like when I'm analysing the banks, I didn't really worry about it too much, you know, I kind of ignored it a little bit. But the same thing goes here. What's more important here is looking at this as 1 here, and probably got the wrong one there, but that's okay. So we'll just look at this. Whoops a daisy. 1 and 2 here, and 1 and 2, that's 1, 2, 3, 4, 5, so it's probably the third here, but I'm not seeing the fourth wave in here yet. It'll be there somewhere at some point around in the Asian section, I suppose. So this can go up to 390, 192 sort of area here. So we're looking for some sort of, you know, maybe I've counted that wrong in here or something, but maybe got 1 and 2 and 1 and 2 or something, you know. But yeah, let's just see this finish off here, and we'll see what it looks like. Once we got 5 waves up there, anything above that, then we know that we're going higher at that point. So that's really the gist of it at this stage. So yeah, we just need to, even though we may not understand which is the best count here, you might have an opinion about which one you think is good. All I can see is in the stock market, I can see it can be counted both ways, you know. Just as an example here, if we look at Berkshire Hathaway, for example, we can look at this here as 1, 2, 3, ABC for 4 and down for 5 here, so that makes it quite good, because if I put this here as wave 1 here and wave 2 over here, like we're doing with the SPX and all that at the moment, then this is already rallied, you know, putting this as wave 1 here and 2, it's already gone past the 61.8%. So in some cases, you know, with old Bertie here and Microsoft is another one where we can like sort of look at this coming down. You know, it's quite a strong trend coming down, so we can look at it like this as 1 and coming back for 2, you know, sort of thing. So different, you know, but then you got the banks, which are different again, where you've got a situation here where it gets quite complicated from the top here. We can count 5 waves down here, so we need to stay with that, but then looking for the A wave, the B wave, and then this is where we get that spike, but I'm ignoring that and going 1, 2, 3, 4 and 5 up here, so pushing just up here to finish off at 35 for BAC, and then rolling over at that point, you know. But you know, I mean, you could put the B wave over here if you wanted to, you know, but it's probably the right thing to do, but I kind of see past, you know, right and wrong's a pretty grey sort of area, really. So yeah, so it's just, I'm just pointing out that there's different ways to see things, you know, and I think that it's more mature to accommodate both of them and then come up with a solution that can handle both of them. And that's really what we're doing, in a way that you know, we can use the trend line to short through here. That would be one way to do it. We know we can short under this level here. By tomorrow we'll see, and what you really want to see tomorrow, not in the beginning but in the afternoon session, is you want to see that you want to see the market have a good move down. And when it does move down, like a sharp move down like this here, you don't have to chase it, you just let it finish and it'll come back. So you know, you've got it under this low here, and then you can bring it under that second low and under that one, and if you don't get triggered, then you don't get triggered, you know, and so you bring it up to here, for example, and the market, you know, will come back up with a little ABC pattern or something, and then, you know, it may or may not come down, because this is what we're talking about. We're talking about that, because if I was very confident, we'd short it in the box, you know. So then we can just bring the green line up to the next one here for that. Okay, it's 10 to 8, so my platform resets and just goes quiet for a moment. So so I can't move anything, so I'll just pause it for a second or two. It's still sort of resetting a bit, but I might not be able to use some of the drawing tools, but I'll just sort of carry on a bit. So the triple Q here, the same thing. We could look at it as 1 and 2 and 1 down here. We could look at all of this as the A, the B and the C. So once again, 1, 2, 3, 4, 5 up into the box here and then drop. So you really want to see that sharp move down. You know, you want to see something like, we're looking at this rally here. You see how that's got a little 5 waves there? So then you can short under this one, put it there. So it's just a bit of patience, really. Hard for the young bloods. And then you come up for the second one here, and then you sort of short over here. You don't get the best trade, but you get a safer trade. You know, you might be able to see a little 5 waves in the first one here and go at that point, you know, or if that starts to run and break a new low, you could go for that. But just do whatever you do really small, because you see how that comes back to bite you. You need to be able to accommodate that, you know, keeping the stop above the market. That's the triple Q, and this is the NASDAQ here. So we can look at this here too, with wave 1 here and 2 here, and wave 1 here and back for wave 2 here. And this back for wave 2 here would be the A wave, the B wave, and the C wave up here in 5 waves. So the C wave, this C wave here would be wave 1 and 2 here, and then that would be the top of the third. We'll need the fourth, and then we'll need the fifth. Okay, it's possible that we could look at all of this down here is wave 1. Not so good in this particular picture, I have to say, but it could give us a higher rally here, and it's what we've got to be careful of, because we could end up with putting wave 1 over here and looking at this as some sort of A, B and C wave here. And what this would mean, it would be 1, 2 here, 3 up here, 4 over to here, and 5 over here to hit this trend line over here. You know, taking the trend line from these 2 points over to here. So it could do something weird like that, just to catch you off guard a little bit, you know what I mean? So that's why you need to be a little bit patient and come from the lower end rather than coming from the top end to short in this case, you know. If, like I said, if we had a very clear 5-wave structure, well then we could short in the box, but I think we could get caught and it could come a little bit higher. Maybe not, but actually I can leave that one where it is. The ETF for the Russell here, same again as well. It counts quite nicely as wave 1 here and 2 here, and then wave 1 here and 2 here. So into the box here, there's a trend line here that you could, you know, drag over to this side over here that may or may not be helpful. But yeah, so look, I think in this case, now that it's got a little bit of support on the 180 here, which is a really important number, and the gap on the futures could be important as well. So if it covers the gap on the futures and then finds the 180 here as the resistance, you know, using something like this here where it bounces on the 180, goes back up, comes through, and you got that low to work with, and let it come back up and work it from there and work it from there. Most of the time it will come back above the level, so it's not a clean cut there, okay? So that's that, and the Russell itself would be much the same as well. The platform's still doing all its things. It's just getting ready for the Asian session. Come on. Okay, so over to the Russell here. So we've got the same thing happening here again. We could just come to this box, or we may come back up higher into this box. Obviously, as I've mentioned yesterday, is that all of this here is really where it'll probably try to get to in its own way. I mean, the lower end of this, it will, could fail as well. But if we looked at this as just the ABC rally here, the same thing applies. We've got a nice impulse wave here, and we've got an unfinished impulse wave here, so there's a bit more to go up here. If it comes back down and finds the 18 as a retested resistance, then you can look to, short it under there, but you do need that first low below the level at that point for that. And the Dow Jones as well, we can look at it all down for wave 1 and 2, and then down for 1 and back for 2. It's really pushing the 61.8% in this particular case, isn't it? So if I took this from one of these highs here, roughly speaking, and here, we can see that the 31,000 is already the 61.8% here. And it does look like we'll need to look at this as an impulse wave. And then this is 1 and 2 on top of a third wave here. And fourth wave to come back and a fifth wave to come up. So the 78.6 might be a better, but see, all of this block here, that is the resistance there. So let's just play it out from that point. And once again, you want that first low below the level here to be able to bring this to the upside at that point. That's where we are. So it's either that or it's not as as a wave 1 here and 2 here and then a third wave here. It's got nice and form. It's got good form as a 1, 2, 3, 4, 5 here, but it doesn't really have the length of a third wave. So normally in a correction, wave A here and wave C can have equality in terms of length. So we'll see how that plays to get the sort of look and feel of it in that sense. But look, it's not going to go very far with that big block there. That's the trick. That's the thing rather. And once again, you could probably use that there as well. But I think the classic trading levels pattern is a safer way to go. Now that if you've got a big number like this, with plenty of zeros on the end of it, it's good to work with that. So that's it in a bit of a nutshell. Yeah. And also too, if this is correct for a moment, if this is wave 1 and 2 and 1 and 2, and we've also got this as a wave 2 up here, so we've got the third of the third of the third, this could come down pretty fast down here. So I would suggest that that you look to to add to the positions on the way down. Now obviously when it comes to the old low here and comes down, it'll probably give you 5 waves at that point and then come back 50-60% and then go down again. So you'll need to be a bit mindful of that sort of behavior as well. You got group 2 in here as well, 650, 720, and then the 80 here for that. That will all play out, and we can just put that in here, 650 and the 72 here, because once that becomes the once this area becomes the resistance, you can also look to add another short position at that point, because that means it's leaving the 31 at that point. So we'll look at that when we get there, but I'll just remove these. So that's it really. Just keep building in on any weakness over this side. Okay, alrighty, cheers.